All right, everyone. Scott Henderson, shooter. Let's go ahead and jump into this today. Take a look at some charts. Take a look at pharma, only because of mRNA here. And of course, at the end of our presentation, of course, please do review our disclosure. I guess it's fair to say that Bessent's effort was to reverse the direction of the dollar. That's what we've gotten here. So now we know that will be an outcome moving forward with any kind of buybacks. Bessent and changing the buyback on short-term or long-dated bonds as far as to offset the 30-year. This is going to add quite a little bit of liquidity because I think what he just did is going to be a temporary move. I don't think it's going to stick very long, just like even though the JPY, and I'm just popping this up for a second, has really just gotten back about 50% of the gain, from and it's estimated that the number is actually about 260 billion in yen they bought. However, this is a rinse and repeat cycle. This is now that they've drawn the line in sand, which is at 5.3%, is a line they will defend ruthlessly at this point. At least that's my opinion, right or wrong, but that's my thought. And the challenge still sits there as far as what happens with the yen. So it really didn't provide a solution for me, but it did provide a short-term reprieve. And, today I added some TLTs. I stayed small because I questioned whether it's going to stick. I wanted to add Bitcoin, but I decided not to. I want to see how it sticks, simply because what just happened today, as far as the announcement to go from 2 billion to 4 billion in bonds, as far as the buyback, really could be short-lived with what's going on with BOJ. And the rumors are all over the place. I mean, it's insane how much stuff is not real, or let me put it this way, a lot of stuff out there right now I can't even verify. And I'm pretty savvy at looking at that stuff. So we've now had to impose this, what I call a triple verification standard, to determine whether or not it's real or not. That makes it even more challenging here to really get a good beat on what's going on. But I do think Japan has no choice but to start liquidating some treasuries, because I don't think what they're doing with the FEMA window is working based on how we're still seeing the market sell. South Korea is still selling. And I realized it basically stopped in South Korea and it started back up again this week. So you have this broader, I don't want to use the word contagion, but I'm not coming up with a better word. There's so much turmoil in those currency markets that they can't maintain the status. And when they hit that brick wall, they have limited options on what they can do to try and save their currency. And it becomes an all-out war until it fails. So they will sell all of the treasury. Now, one thing that I've been spending a lot of time on is looking at what's going on with Bitcoin and the stable coins, and far as how much revenue this could generate for the Fed as far as treasury sales. And we came up with a number this week about 1.1 to 1.3 trillion between roughly 9 months to 36 months out as far as the timeline, which is one reason I think they have so much urgency in getting the Clarity Act and everything else done, because they realize their main finance vehicle for the debt, which has been Japan, is faltering, and they really are likely to lose a big chunk of that. And they're trying to find a way to monetize the debt in another way, because obviously, China's been selling, pretty much everybody else, even Europe has been selling. So the reality is, for us to fund that debt, we need another vehicle. Otherwise, we might not fund that debt. And that's really where I think the chaos is. The challenging part is to find a way in that door. With that, I'll go into cryptos here a little bit later. I want to go over XRP and Link today. But when we jump back to the equities, I mean, we had a pullback even after, the Fed made that announcement today. And I would suspect that we should have been higher from where we are. That was my first take off of this. We've done nothing wrong. I mean, we're right in the top of the range. We still have huge institutional buyers, but at the same time, everybody is staying ahead. And, ultimately what that means is that really they're spending so much money trying to hedge the downside because of that risk exposure. Their gains are going to be limited to the upside, which is why you don't see me with a lot of long positions outside of what I have confidence in. But at this point, the count has not broken. We still are in intermediate wave 3. And, right now, the target to me, where wave 3 is the longest wave, still measures to about 812. Now, we could come back and test the bottom of this box down around 743 first. Peaking drive 1, peaking drive 2 in that wave. We get a peaking drive 3. Could come in a little shallower even, and maybe just be slightly the longest wave. There's nothing that would prohibit it from doing that. But that's sort of my thought on the SPY. Still has done nothing wrong. It's hanging there really well. Now, on the other hand, the NASDAQ is in quite a little bit of difficulty. Now, just like there are certain vehicles that we will have a catalyst for, and I'm going to use El Nino as an example. We know for a fact right now that El Nino will put a tailwind behind cocoa and coffee. We know that for a fact. Same scenario when it comes down to the Fed buying back its own bond. It's going to create a headwind for semis and tech. Now, of course, that's been our main driver. And, obviously, whether that manifests or not will be a factor that we'll find out tomorrow or next week or however it plays out. But at this point, I do see some significant downside as far as semis. And with that, let me jump over to SMH and just get a visual. I'm going to stay with the weekly chart here because the assumption was this was done, right? And it's still not broken. We still could have peaking drive 1, peaking drive 2, or it could just be an ABC and this become a leading diagonal. So this was our A, this was our B, this is our C. So we really are at a crossroads right here. The body of this candle, to me, gives me some conviction for continuation to the downside. Roughly, that's about 556. So if we come in and bring in a ending diagonal kind of look, we should have a very decent broad push, assuming that's our 4. 5 should come down to at least 505, and maybe a little bit lower than that is the most likely place, which happens to be right here where this band kind of appeared between this. What is that? With that thought, I think we pull back to this band, maybe 50% of that range, roughly about 495, I think is very viable here for semis. So obviously that adds quite a little bit of weakness to my thought as far as the indices, because obviously semis and tech has been our main driver. If that starts to get soft because of the macro outlook of what's going on as far as monetary policy, obviously that's going to continue to weigh as far as the downside. Now, let me jump. I want to look at Link. Start off here and just look at the daily. We're about ready to break out here. I mean, as long as the numbers for the Fed hold, this is a tailwind for crypto. However, I wanted to see if it stuck. Because quite often what you have with these kind of moves in crypto that are related to a political move like this, you get this pump and then you get the dump right after it. So, we could just reject right here, come back and text that box. I'd like it on a pullback maybe to $9 would probably be a better way to look at that as far as my thought. But I still think we have some decent upside when I come in here and bring the weekly out here. And when we have a lot of upside heading back up here, we do have a confirmed base down here. This also is a mound base as well. So, structurally, we're likely to build out a new mound here if this is where it's going to do it. The challenging part is it here or are we going to get it over here maybe in late November? I would think definitely by November is my thought. So cost averaging in here makes a little bit of sense for me. Also wanted to jump over to XRP because we've also found quite a decent looking bottom here as well. We do have some clean divergence in RSI heading back to the upside. And you know how much I love XRP. But, the crazy part with what's going on with the Fed, even though, Trump was really sort of talking up XRP a little bit today, he didn't really go like, hey, I'm just going to come in and buy this. I'm going to buy that. It wasn't specific. Whoever that guy Paul was, he sort of went back and said, hey, I'll probably take your advice on what to buy. Well, chances are what that means is he's going to buy a little bit of everything with 40 to 60% in Bitcoin, my assumption, or more in Bitcoin. And the altcoins won't get that much attention yet until this infrastructure is built out. Now, that happens to be a second project that I've been working on. I've been looking at that stablecoins as far as what that build out looks like and how it might affect us and how potentially we could take advantage of it. And I'm not seeing a lot of opportunity there. I'm actually seeing more opportunity in El Nino because of how large it is and the history we have of how it's affected crops. That is part where I want to focus on specific things. So looking at Bitcoin, nice move this morning. It really has not taken out the bear case until we're above this, this 82. So we got quite a little bit of ways to go. I want to really see how this holds. We have to take out the shelf at about 71 first for us to really look at that and say, hey, this ABC is invalidated. However, I will say this, the Fed's actions today are clearly short-term, mid-term bullish for crypto. So I'm not opposed to chasing it. I just haven't decided I want to go in that direction yet. I want to focus on gold and silver and TLT simply because I have a good beat on where I think it's going. And so far it's done pretty much what I expected it to do. So I have a better handle there than I have on crypto. And on top of that, the futures as far as crypto, still everything's short dated. We don't have a lot of people going out and saying, yeah, hey, I want to buy January, 85K Bitcoin. There's not a lot of traffic there. I mean, there's some traffic there, but not a lot. So SLV right now is working, but I do expect this intermediate wave to build out. So I do expect us to get back to 80 bucks. I think we do test the shelf up here. Now we might reject here. Could be a little noisy in this range because we're going to run into a little resistance around 62. All right, looking at GLD now, this right now is my largest position. And I looked at this threefold before I put that on and before I added to it. And the main reason is I saw multiple catalysts. I also saw technical indicators that I really liked. We've now crossed the MACD on the weekly. The RSI, we got a kind of a double bottom. I classify that as divergence here. So this is what I refer to now, or how I'm labeling it, as a valid mound base. In other words, where we have a confirming low and a divergent low in the reversal that occurs there. So that to me means that we're going to build out this next motive wave like we built out here, and this was our corrective wave. So, we could clearly hit $500-600 here in GLD from here. I don't expect this to be a weak trade. I expect to get a base in this and hold a base position on it and trade around the edges, because I do think it's going to follow the path of what the Fed is going to be forced to do, which is why I'm there. All right, let's jump over and take a look at some of our other names. All right, so we also have UUU on. So far, it's done pretty much what we thought it would do. We got in a little over 12 bucks, probably a little bit late, but hey, I'll take it. So I think this is wave one. Let me just map this for you. So, this is likely our wave one. So we should come and put it to 3, 4, 5. So I think we get back to about 20 bucks short term. Obviously, the reason I bought this was because of Trump's buy magnets. I think at this point we should just buy anything he says buy. It's so far it's pretty much worked. So, but that's my thought on UUU. Hive, I'm kind of just sitting there. I'm not doing anything with it simply because it's not been moving. I do want to get back in SpaceX. Tomorrow is when we have all the shares come open. So I'm just pumping here because I think we do pull back a little bit more. We get back to about 135. I'm probably going to step in with 125 cash secured puts. And now let me take a look at a couple of quick names and then we'll go through the requests. I want to look at CRISPR, and what just happened with Moderna is significant mRNA. Now, there's this Merck and this Moderna partnership, and basically Moderna has the mRNA link and Merck has the clinical link for all the treatments, because that's not something that mRNA really has. And the vaccine, the cancer vaccine, and right now the focus is skin cancer. And I spent quite a little bit of time on that this afternoon, looking at that pharma picture of what's there and where we potentially could go. And right now the valuation is about 60 billion as far as mRNA, and with now I realize that's going to be split between Merck and mRNA, but if the vaccine becomes like a flu vaccine, or the seasonality could make it a $250 billion product line. However, that's a little ways out. However, I think there's a broader development phase that happens in mRNA, just like when I first started talking about CRISPR maybe 3 years ago, in that once that technology advances to a specific point, just like we're seeing in AI data center development, we're going to start seeing these leaps and bounds as far as advancements. And then we're going to have these outlier events like what we just saw with mRNA, as far as that successful treatment plan with, patients in that discovery phase. And as we get into the realm where mRNA can fix specific things, provided we don't have, like what are the side effects from what we got from the mRNA from COVID, is one factor I think we all need to consider before we take another mRNA shot. But the fact is if we can mitigate that risk and move forward, mRNA is a huge moat. In my opinion, it actually can be bigger than even AI because the retail side is going to have such a higher ticket. It's like a guy going in and buying $150,000 house is not going to spend as much money on improvements and furniture as the guy who buys the $1 million house because it's higher price point. Same thing goes as far as prescriptions and or a vaccine or personalized DNA treatments as they progress. So, and that CRISPR machine is really at the foundation of it, which is one reason I pulled this chart up. So I think, if this sticks, I think we do break out and head back up towards $100. It may take 3 months. It may take 3 years. I can't tell you when. We've been in this base for a really long time. And that's because the tech is still not fully developed. The opportunity's not changed. It's that delivery mechanism like Merck provides for mRNA is not really there across the board in the medical community yet. So I would say this is an emerging area. But mRNA, to me, is a significant milestone because now we've jumped into one of the leading causes of death in America, which is cancer. And, ironically, and I really am ticked I don't own any of this. I really am, because I was calling it out back over here. Boy, it looks like a good spot to take a piece. I never in my mind thought we'd get a 200% move right there. Never. But it's a perfect mound base if you look at this from what actually happened as far as the structure is concerned. We had our wave one, our corrective leg, full reversion to the mean. Typically, when you put in a confirming or a valid mound base at the beginning, you put a second one in on your next mound. That would elevate us up to maybe back about 550 from here. So I'm going to be stalking this like a hawk now, because once we get any kind of pullback and stability on this chart, I want to try and put a piece on because I see the catalyst. I see the upside in that stock. So let me jump over to some of the names that you guys have brought up, wanted me to look at today. All right, let's jump over, and hopefully you guys see my charts. I guess I should have asked a while ago, huh? Somebody give me a 5x5 if you would. I was a little late. Perfect. So let's look at Marvel. I actually like the look. Nice pullback, as far as structure. Let me come out. I want to go to the monthly on this one. I've been doing that a lot lately, looking at the monthly charts. It's where we have so much noise now. Sometimes we just have to step out in time to get a visual on where we really should keep going. Sometimes the dailies are extremely noisy. Sometimes the weeklies are. Sometimes even the monthlies get noisy. But structurally, we have 3 peaking drives here. Now, I'm not measuring it that way simply because of my internal peaking drives. And we have peaking drive here, 1, 2, 3 here. So that is wave 1. Nice clean corrective leg, pretty much equality as far as an ABC. Then we have what I would classify as peaking drive 1 in mound 3. So I do expect to move this up here, by the way. However, at the moment, I'm assuming this was our 3 and our 4 is in it and we'll get a 5. And the reason is I want to get a visual on really where I think we will go. So I think 360 is the base case. And potentially we could push up maybe to that 428. If it extends, then we're looking at this $500 target from here. So Marvel has some nice upside, nice recovery. I know when I went through and looked at it, and I looked at this number, I think it was last week when I really dug down pretty deep, and I was looking at this. I didn't like this look. Man, my thought was that it would continue lower. I was thinking, hey, this is 1. Maybe that was a 2. Maybe get a 3 or shallow C. Brings us a little bit lower. I sort of excluded it. Turns out that was a little wrong based on what's played out at this point. However, unless we get back above the body of this candle, and really it's this candle, candle at this 262. The reality is that still could play out. So just be conscious of that if you wanted to add a piece in Marvel. So if it does play, realize there's significant downside. So just know where you're wrong. And in my circumstance here, I would say we take this out, this 228.78. I would not be holding a full position below there, but you could drop it down to the next shelf at 218 and hold a little more risk there, because it does look pretty constructive, especially with this peaking drive here. We do have a confirmed high here. So what that means is that we're going to get at least one more divergent higher high in price with a lower high in RSI. It's going to come. It's one of the few things I have 100% conviction on when you have a confirmed high, 100%. And whether or not it manifests after this C, or if it manifests here, can't tell you. Wish I could, but can't. All right, let's jump over to CBRS. I'm going to need to step down here to the daily thin tape or as time, just to give us a visual here. Actually looks structurally good on this pullback. Nice wick off right at the base, of this 618 fit pullback. I mean, it's right there on the line. I would use that as my, line in the sand below 201.11. I would probably trim. If not, I see no reason with market. I'm going to use the term with market strength pieces, small pieces. What I don't like is where the MACD crosses. We're topping very much at the top of the range and we're rolling over. RSI is looking like a roll as well. Not that it's going to roll over and fall below this, but it could very well just come back and test this base, forgive me, right here off of these two prior lows. That's kind of where your confirming trend support is. So it could pull back to 185 first and just build out this shelf that it's built. The fact that it didn't put in a higher high here off of this wick and you got a secondary wick implies that it wants to test the lows. That's sort of my thought. So I would like it much better around 185. Now Meta to me just looks done for a little while here, kind of toast. I don't think it's going to recover. I think this target is very viable around 395. So it's where we're broadening. Wave 5 puts us around 477. We've now broken below the body of these prior candles, so it's probably going to test at least this low at 525. You kind of see what it does right there, but I think it comes back and tests this 482. And I've actually got that flagged as a sell on my look. I don't think it's a good buy here. I would rather go in and buy SpaceX, versus that right now. Simply because even after we go through this sell here on the 20th, I think it's got some decent upside. I don't know if you noticed the launch projection. And I'm when I'm looking at one name versus another, I'm like, okay, why should I like Meta more than SpaceX here? Or why should I like SpaceX more than Meta? And, part of the reason is the growth that's going into SpaceX and what he's accomplishing and the momentum he has. And I'm forgetting when that first launch comes out as far as the AI satellites. And realize he's already ready to freaking launch the AI satellite. So once the launch takes place and they get launched and they actually send out the satellite, right? We're going to have a pop off of that because now the dynamics change. Now, then that next phase that we have to go through is that it worked, all right? Now, I can't tell you how long that's going to be. Running into that period, we might have a little bit of a pullback. But I think in the meantime, I think it does pretty well from there. Whereas the chart to me just looks dirty. I think the most likely you have this sissy down here, sell side imbalance right here, comes down here, which happens to be right where my mark is kind of thing. So I would think that would be where we would go. All right. Sentinel-1, I like it for continuation here. In fact, if you don't have a position, I even like adding a position here. Any pullback, roughly $20, I think is viable. I think ultimately we have a target around 29. So, when we got all that noise and said, hey, yeah, Sentinel looks pretty good, even on this pullback, I think we send something else out there and said, hey, it looks pretty good. All right, let's look at AVGO. Now, we have not taken out, I drew this little firming trend support line. Basically, I anchored off of these two lows and this particular high. We've wicked below it, but body has not closed below it. But it does look to me like that is going to ridge out. Again, semis are going to have a lot of weight or a little bit of a headwind related to what Bessent just did as far as buying back treasury. So I think that weighs a little bit. It gets back down into these gaps somewhere in here. That might be a spot, 340, 345, maybe to try and head back in there. But we really want to see the dynamics still playing out between Japan and what Bessent's going to be forced to do to try and counter that. And I don't think this is going to play out over a few weeks. I think what we just saw happened, we're going to be dealing this for quarters, if not years, because the debt is just not going to go away. And as long as we keep pushing on that 5.3 or 5.25 window, there's only a limited number of responses to what they can do. And one of them happens to be buy back our own debt. So until that stable coin instrument gets fully functioning, which actually that could provide some significant relief for our funding mechanism if that gets built. I mean, the main problem is that we own our own debt, because ultimately they're passing that on to everybody in crypto. So if you're buying crypto and stablecoin guarantees XRP or whatever, and we're paying a premium, for those transactions, we're paying them. So, I mean, that's the only downside to it. But we already know that they're going to deflate away the debt, and ultimately we're going to pay the price either way. So, honestly, I'd rather have a solution that's pretty solid, that puts us back in a functional place with our debt where we can manage those kind of bills type of thing. So, but I think semis have that headwind specifically from the Fed actions. All right, looking at Irene, the challenge with Irene and many other names is we've now lost the FOMO in the flow as far as the options. So it's not dead, but it's not expanding. We keep getting these pumps and then it ends, pumps and then it ends. And in that scenario, it's very hard for price to build. And now I'm looking at what the chart tells me. And the chart tells me is that we really need to test this shelf. We need a body of a candle down here around 31. That should get us done. We get that kind of a pullback. MACD is flat. RSI is flat. There's no real volume that's stuck. We still have these outlier sell candles that are coming in after these buys. We had more sellers than buyers on this pop right here. So they came out, totally took out the buyers to the downside. So to me, the chart looks bearish. I'm thinking this ABC needs to play out. Now, whether or not it's a shallow C or a deep C, I can't tell you. I mean, it could still be done. But at the same time, I think the dynamics of the market have changed. I think we have a headwind, and it directly relates to currency and the yen carry trade. The fact that South Korea is continuing to unwind as far as the stock market's concerned, implies to me that, or at least, and I have nothing to prove this, but my thought is they're unwinding the yen carry trade in other parts of the world first before they're forced to come in and unravel the U.S. And they're very simple ways to do it. Just like Citadel controls a huge block of what options are traded in the U.S. stock market. The same thing with the entities in other parts of the world who open up those margin accounts. So they all they have to do is change the risk dynamic in their formula. And a guy has, $500,000 open in margin, and he's just gotten a haircut down to $250,000. And what happens? He's forced to sell. So as we see that continued pressure in those markets as far as being forced to sell, I think they're using other means to unwind the yen carry trade, because the problem right now is so significant. They need to try and create whatever relief is possible. And obviously, other countries will be the sacrificial lamb before the United States. So I think it's that well planned. I mean, can't prove it, but that's my 2 cents on it. So I would think that we have names once they've lost that FOMO, and I would classify, Irene lost that FOMO right back up here. I mean, decisively. It attempted to come back, and it was rejected decisively again. It attempted to come back again, couldn't put in a new high, right? And then decisively it was rejected again. It just doesn't look done to me as far as the structure. I think of it that this is probably an impulse, this last leg, even though I'm showing it as a total ABC. So I'm saying this internal leg here, this is 1, this is 2, this is 3, this is 4, and we get a 5. That's really what my thought is. So I would like a body of a candle to test that. I have more conviction to the downside. OKLO. Now I've also got this as a sell, even though it's right down here at the sissy. And part of the reason, same reason. the contract have evaporated both on OKLO and credit. I mean, they disappeared. So, in other words, those folks who were trying to buy this low left, right? So now we need buyers to come back. We're not seeing it in volume. And until those contracts come back, I think we'll test these lows down here around this band, get at least down to about 50% of that sissy at about 29, 30 bucks roughly in that range. And that's sort of my 2 cents. All right, looking at Credo. Same thesis on flow. However, this is more of a broadening formation as far as the top. So expect a little more volatility in this name. When we do get that second retrace, which should put in our C up here in this flat, then it's likely that we do head back to the upside. All right, let's look at crack. Nice upside here. I think refiners could continue to the upside. So I would classify this as a continuation from where we are, just assuming this is our trough, this is our peak, this is our trough. So we should get a new impulse here. So this is our 1 and 2. Should put in a 3 somewhere here. And, a 5 maybe between 73. I've got a target up around 81. So unless it takes out, I mean, you can come back and use this ledge, give it some room. But the reality is you can come in and just go to 50% of the body of this candle. As long as it stays above that 56.85, hold. OIH looks to me like it's a breakout candidate. We probably do pull back first. So this is an ABC. That's our A, that's our B, that's our C, right? We pull back and give another A, a B, and a C, then we should launch back out of that. Or we get enough FOMO to pull above. But again, we're seeing these red candles build up into this on the highs. So, again, that might be something that pulls back. And what does it like to do? If you look at the history of tape, this is another one that likes to pull back. I don't know that oil resolves itself with the Straits of Hormuz in any reasonable time. So the question really is how much of a problem is that? And how much slack are we going to be able to pick up domestically? Or is it going to shift to Venezuela and elsewhere? And that's something I just can't answer. I'm not that much involved in oil to be able to pick that out and say, hey, that's the macro. This is the way it's going to go when this happens. I just don't know that much about oil. And, I'd have a hard time chasing too much oil. But at the same time, 3 to 5% is, I think it is viable. And I do think oil, potentially has some significant upside from there. So really depends on where your risk dynamics are. I also like copper too. I also like corn and not soybean. I like soybean short because with the shortage of sulfur, a lot of the corn crops have been converted to soybean. And on top of that, with El Nino, South America has some huge upside, specifically Brazil, or historically it has when I ran through it with AI as far as what the dynamics were there. So some of the softs look good, as so to speak. And then again, I mentioned coffee and cocoa. I actually like that a better play than oil here, because my question comes back is how strong was Iran? How are they still surviving? How are they still able to hit us? And the only thing I can come up with is that it really is a proxy war, and whatever they've been doing is they've been fed, whether it be China, North Korea, or from Russia to I don't know whom, has been feeding them the artillery and the missiles to accomplish this. And I don't see that ending if that's the case. So I'm questioning as to how the hell they've survived as long as they have with what we've already thrown at them. And that's the only logical conclusion for me. So if oil hasn't blown up to $200 a barrel at this point, I don't know that it does. And if we don't have that catalyst and it gets resolved, the flip side of the coin is we're going to go back to 50 bucks a barrel pretty damn quick if it gets resolved and the strait gets open. So the storyline of what we're hearing as far as all these tankers coming out of the Straits of Hormuz, 8 million barrels here, 8 million barrels there. I can't validate that. I've looked, I can see the ship traffic, but I can't tell what's on those boats. So I don't see that much oil coming out of there. So to me, it's still closed. So in that sense, oil infrastructure should do well here in the United States while that plays out. But at the same time, buying at highs is not the dynamics that really interest me. And I guess what I'm saying is I would rather do something that I know is more towards a low than necessarily towards a high in the dynamics of the market. Because if we do get the yen carry trade unwind, it's not going to matter what you hold, it's going to unwind, and anything that's elevated is going to unwind more. than if you buy something already at its lows. The retrace would be less significant here than here, as an example. So that's sort of how my mind works. I don't know if that's right or wrong, but that's my thought. All right, Sophie, I like it here, actually. I think it's a beautiful looking spot. I think banks do well with what's coming ahead. I have a count that puts us way the heck up here. I like some of the products. The chart is in a good spot. We have a valid mound base here that's formed, as far as the divergence, double bottom that popped here. So structurally, unless we take out that low at 15 bucks, the most likely outcome is that we test these highs. So I like Sophie. Let's look at ARKG. Now, this actually is probably a decent play. My challenge here on this spike from mRNA, I don't know that holds. Anytime you get that kind of UVer, you always get some kind of reversion that's quick. It is probably just as solid as buying mRNA here or something else or Merck. And it probably gives you more diversification. So I think we've completed one, completed two, we're working our way into three. The question is, do we get a little better buy around 42 bucks? So either we think about it from cost averaging in, hey, I buy a piece now and it pulls back, I'm willing to buy it at 42 again. If it pulls back again, I'm willing to buy it at 38. You want to always assume that we're going to test the floor of that wave two, but not take it out. And if it does take out that wave two floor, roughly at 36, 35, I personally would trim to 50% whatever I had in there. Just cut it back and then run a trailing stop on the balance, because at that point, the breakouts fail. It takes out this two. You no longer have that bullish bias to the upside. It's gone. All right, EWY, South Korea. It's a mess over there. I mean, it really is. Count says we're heading higher. I don't like when there's that much political noise and the stock market's declining, because gauging what's really going on over there is challenging. But of course, the chart doesn't look bad. So let me go back and just review the chart. Leave my political opinion of that elsewhere. So assuming this is our one, which is too shallow in this particular leg, saying that's our one, chances are what we've got is that's peaking drive 2. So we'll get a peaking drive 3. Looks more structurally correct towards the impulse to the upside. So I think that would be a more realistic count based on what we see here. I'm just looking as I'm sitting here. We do want this 166.49 to hold. It gets below there, then I probably would be straight out. I would not add here, but chart-wise, it doesn't look bad. I mean, we've had a nice pullback in what was a pretty sound market there for a little while. And it does look like a clean ABC here as far as the structure. So I'm trying to come up with reasons why I don't like it, and I'm not seeing a lot there. This is, our ABC, pretty much equality, which is good. So whenever we see equality like that, I look at it as it's done. And, the way the MACD, that we get it crossed back to the upside, then I like it as far as an entry. All right, DRAM. Going to have to come down to the daily on this one. I'm going to go back to my statement on tech and the headwinds that it's going to run into from Bessent buying back bonds. And the most elevated names are going to be the names that pull back the most. And, we've already had that kind of a move anyways. We've already pulled back. However, once it broke this shelf, here at this 55, it was a reversion to the mean candidate. That didn't manifest. But there would be nothing that would prohibit this from doing that. And you have what appears to be an ending diagonal, if that's the case. Just trying to measure it because it's ABCs. You look at this and it finishes here. Could very well do that as far as the count. So I'm not sold on adding tech or semis back solely because I don't think Bessent's done with going from 2 billion to 4 billion. I think he's going to have to buy more. I think it's going to be a bigger number. And November 4th, I think, is the next announcement. So we got between now and November 4th until they make the decision on whether they're going to change that structure from 4 million to something else. And I would suspect that they double it again or more, simply because they're going to need to pump the liquidity into these markets to keep them afloat. That's sort of my 2 cents on it. Anyone else have any other questions? TTMI. What the heck is that? I don't think I've ever looked. You're welcome, folks. TTMI. Cleanly doesn't look done. Probably an elongated A or an extended A here from this look. So that's our A. This is our B. So C either comes in at 102 or comes back at the shelf at 91, I would think, with this rejection. the way that looked. I'm just trying to see where I would like it. Gets back above 140 again, then it's a solid long candidate there. All right, going to RBLX. Clean divergence. Buyers are trying. Gets back above 42.52. It's worth a shot. I would not pull it before that. Reason is there's not enough euphoria in this. I mean, here we had some euphoria and we still rejected it. Notice how we had a little bit of euphoria, but each time it does this shallow, and this is shallower, I would think that we come back and test 25. That would be my thought. Microsoft is going to test this. Let me pull the fib up. This number right here, change my color so we can see the thing. Lord have mercy, why do I have the 20 point? So shallow retrace is going to be back to about 463. 50% back is 431. This is one hell of a huge general candle. We got one follow-up candle. And now we're hearing a little bit of noise here because we didn't get the third general and we didn't really get up to our resistance band we rejected before that. So this euphoria is gone. And also we're rolling with RSI. I mean, rolling, okay? So most likely cases, we come back and test this 449 minimum, or we come back and test this 426 next before we head higher. So this would be peaking drive 1. This would be peaking drive 2. Challenging part 2 is where our slope is. Our slope is way the hell. So off of our flushing drive 1, right, our slope is way the heck back down here around 437. So long term, I like Microsoft. I think that pump that we got here is pretty much done for the moment. Autodesk. Now these SaaS companies that are doing a great job of converting to AI have some decent upside. This happens to be one of them. I don't remember when I looked at it recently, but I did just recently look at this one. So this is our 1. This is probably our 3. And we probably put in a 5, and we get a retrace. As long as it doesn't take out this 234, I think we're going to head up back to about that 284. So if you're in it, hold it. I would not add here. Even at that breakout, I wouldn't add. Simply just the market climate is really where my bias is. Like, no, I don't want to add anything related to tech at the moment because of that headwind from Best. Because all he's got to do is go to 8 billion, and I don't know that we get the same result we got today. I think it's more like a confidence issue that occurs there. 2 billion is chump change. 8 billion is, oh God, how big is that problem? Maybe I shouldn't be holding all. That's, so there, I think a different mindset comes into play. GLXY. I don't dislike it here. I like it better here at 1234 because we got no support here. I mean, this has held this shelf right here from this breakout. After we got this flush, got back up through it, it's held. Most likely outcome is we come in and head towards 38 bucks. Manage stops aggressively here. If you're going to try it long at 20 bucks, gets below there, I'd be out because structurally. Then we're going to come back and we're looking at this speed line down here from this wick here. So likely we're going to test that $15. So that's just roughly saving you $5 a heat to the downside because if it breaks below there, the most likely outcome is. All right, any other questions? I think we've covered just about everything. Hopefully it was helpful. Until next time, everyone.